Our next panel is transformations in Web3 venture capital, and you know, we like to have we have Rob Schmults from Blockchange and Marcos Veremis from Accolade and Sam Hallene from CMT and Vanessa Pestritto from Flare, and they all kind of bring in a different side. You know, Sam and Rob at VC firms. Marcos has the different view coming from, he sees all the VC funds, and Vanessa, who comes from the side of being an operator, right? So she kind of is in that world. Flare is a layer one EVM compatible network, and so she kind of is a on that side. So I think, you know, we're going to leave it to Vanessa, but I think you guys have different perspectives, and we can kind of hear about these ideas. Thanks.
Thank you. Good morning, everyone. I'm Vanessa Pestritto. I have a background in venture capital. I launched my own fund. I've deployed capital on behalf of corporate, and I've now worked at Layer 1 for the last 4+ years. So thank you for the introduction on Flare, and Paul asked me to moderate this panel given my experience in venture and on the operating side. So though you were just kind of given an introduction, I'd still like you just to share a one-liner about your investment focus and where you're based, just so that everyone gets to know your voices.
Cool. I can kick us off. Yeah, I'm based here in Chicago. My name's Sam Hallene. I work at CMT Digital. CMT Digital is a subsidiary of a 27-year trading and investment firm. By background, CMT Digital is narrowly focused on the blockchain and digital asset space. We've been in the space since 2013 and investing on a venture basis since 2017. And I was the first analyst on our funds, and I've been there for the last 7 years full time in the blockchain space, investing in this weird and interesting world.
Thank you.
Yeah, I'm Marcos Veremis. I'm a partner at Accolade Partners. We're based in DC, and we're a fund of funds, a venture capital fund of funds. About 20% of our assets, we have $6 billion, about $1.3 billion is in our venture and hedge fund digital asset strategies. So we see many funds. We've been doing this since 2018, and I think today I'll try to give you kind of a more high-level perspective than the other folks.
Rob Schmults, I'm a general partner at Blockchange Ventures, early stage venture capital, and I guess as the name makes clear, we only invest in blockchain related businesses. We invest pretty broadly across the space. We've been doing that for 7 years. And while we are dispersed across the US, I'm based out of Boston.
Fantastic. So we have a good mix of different funds with an equity and token strategy, all early stage. And we'll start with something simple. It's transitions to a fresh tomorrow is the theme today. What changes have you seen in the market over the past year? And just wanted to know your thoughts on that from bull or expectations.
Should I start?
Yeah, sure.
Okay. I can start with a fundraising environment because 2023, and I'm sure you guys felt it as well, was really bad, right, in terms of fundraising. You had, initially the FTX situation, the after effects, Gensler going after Coinbase. So you started seeing kind of institutional flows just froze, right? So it was a year that was very difficult. This year, it's much better. And we're seeing a much better fundraising environment. I think the companies in our underlying portfolios seem to be well capitalized. And, in terms of runways and so on. So I think it's a very different environment now, probably more constructive on the regulatory front. Knock on wood, we'll see how that goes, but it seems better. And finally, we're seeing many interesting projects and innovation happen. So we're back in action, I would say, after a tough 23.
That's great. Do either of you have something to add to that?
Sure, from the investing standpoint, so put not us as raising funds, but us as deploying funds. I would say what's kind of interesting and really struck me when particularly for people outside the space said, oh, you must be so much happier now in 2024 because valuations are up. And I thought about it and I thought, well, as a long-term investor, sure, but we're not as worried about day-to-day token prices. But I realized as a person deploying capital, I'm not sure I'm more happy because of two reasons. One, as you see the ebbs and flows of blockchain, when things are down, you actually get a lot less noise. And I've really been struck by the fact that there's almost like a steady state of what I'll call quality investments, or at least the type of investments we view as quality investments. And that seems to not fluctuate that much with the price of, say, Bitcoin. But what does happen is you get a lot of less interesting investments, a lot of noise comes into the space when Bitcoin's up, when Ethereum's up, et cetera. So in some ways, it makes my job more difficult to wade through the less interesting stuff. I think the other piece that's been interesting, and maybe this is specific to 2024, because I don't think I observed it quite as much, there are absolutely more people out there willing to deploy capital, but I'll put willing in quotes. Right now, the hardest thing teams have, and this has not changed from last year to this year, is finding a lead. The difference now, when they find a lead investor, all of a sudden there are lots of people willing to fill out the round, and that wasn't the case the year before. But I always say to teams that your biggest job right now is finding that lead investor, because once you do it, everything else will be that much easier.
There, can you hear me? Okay. Yeah, the only thing I'll add is, or two things. I think all points raised are excellent. The blockchain space, since I've been in it at least, has always been, bottom up. You deploy, originally Bitcoin, you could GPU mine it at home. And it's always been kind of grassroots, different communities adopting. Now you're really seeing top-down, pushes for adoption of this asset class. And I think that's incredibly interesting. That's really changed over the last year, in broad strokes. And at the highest level, at government, it seems like it's becoming a bipartisan issue for the industry. And you see there's now a counterbalance to what I think is overreach by different regulatory agencies, and that they're actually losing in the courts, when it comes to going after certain projects. So I think that's really positive. I also think, maybe for in mass, kind of maybe at the middle of the bell curve right now, we're seeing this like broad-based recognition that the internet, as we know it, is going to change, right? I think everybody in here probably uses like Perplexity or ChatGPT. It's a different experience of accessing the internet. And I think blockchain technology, I think people's minds are opened up to the possibility that we may be using these networks every day going forward, because of these like visual changes that we're seeing in the internet, and then also the different infrastructure upgrades that we're seeing with NVIDIA where it's at right now, and I think these are seismic shifts that can oftentimes go unnoticed, but I've really started to pick up on them in the last call it 18 months.
Great. So we're going to shift to when projects launch, and all VCs have a mandate. Returns are what you have to do for LPs in order to continue to get funds from them. But projects require some sort of sense of community, and sometimes VCs are major stakeholders in these communities. So my question is, when a project launches and tokens unlock, you can participate as a validator, and also you have to manage how you get liquidity. So how do you balance the goal of investment returns against network participation?
Sure, so I'll start. So we're long-term investors. So there are certainly folks out there, and we were talking about this previously, who, as soon as there's the TG, the token generation event, and or their lockups free up their tokens, they sell. That's a model, and I'm not judging it. It's just different from what we do. So we're really looking to invest in the possibility that something we invest in today is not going to necessarily be at its peak value in, say, 6 months, 9 months, 10 months, but more like 6 years, 7 years, 10 years, et cetera. So we're really looking for the long term. Now, that doesn't mean we don't ever sell, but for the most part, we're not trying to get in, get out quickly. In terms of supporting the network, we're an RIA, which has some implications for how aggressive we can be doing certain things, but we certainly are big fans, for example, of staking, which allows us to support the networks we're invested in, where staking's relative, and at the same time, we're earning additional potential returns for our investors.
In addition to staking, are there other strategies you recommend to some of the investors on how to participate but still earn and get liquidity?
Yeah, I mean, again, we have a limitation on what we can do. There's certainly no limitation potentially for some of you in this room to do some very interesting things, and I recognize we're in Chicago, which is famous for derivatives and all sorts of things, and the blockchain has been, if nothing else, very, very inventive on that front. And yeah, maybe I'll leave it to you guys to chime in on specific alternative approaches, but there's certainly no shortage.
Thank you.
So a lot to say there. I mean, I think there are some like covariant factors around tokens, right? And we're a registered investment advisor as well. You know, our first duty is to our investors and to the people that support us and trust us. I think like the first question, it's like so obvious that it might just sound like silly, but you have to ask: does a network need a token, right? Or does a project need a token? And so I think if no, then don't try to force a square peg into a round hole. From there, if you really think that perhaps a token can do well to incentivize people that may never know each other, may never need to know each other, and they can all kind of opt into this protocol, this rule set, then go for it. But you have to align from day one if a token's necessary. And if you have people, pushing you, I think Rob made a great point earlier. If you have people pushing you to launch a token, those are probably not the investors that you necessarily want.
So we'll still get to that. I think it's important because there's a lot of pressure on companies, but there is pressure sometimes on VCs when they say, oh, I'm a crypto fund, and they meet LPs that say, great, when do I get my return in 12 months? When do I get it in 18 months? Whereas we here at Blockchange have a long-term view. For you as a fund of funds, how do you evaluate crypto funds based on the horizon of when you expect to see returns? Are you looking for things early and quick, or are you supportive of things like blockchain?
No, I think it's the blockchain model across the board. I would say most of our managers, if not all, like the way they start taking money off the table is quite often from staking rewards. We were talking about that, and these can be really lucrative. They could even give you your cost basis back pretty soon. But all of them are long-term investors. They have the bulk of our assets, like 80%, is in venture strategies. 12-year fund terms. So. In general, they're very mindful to support like projects long term and be very open about when they're going to sell and so on. So no, we don't support these sorts of strategies. In addition, I would say, and would love to hear your thoughts. I think that if somebody engages in strategies like that, eventually their deal flow, their reputation, will suffer, and it's just a losing game long term. If you're positioned as a VC investor, supporting a project.
I was going to say it is really hard for being an early stage investor and then needing to put pressure on these companies so quickly to provide returns. It's almost that you're just sort of diluting the actual innovation.
And maybe one final thing I should say, if you don't mind, there's not so much pressure for distributions. You know why? Because the institutional investors that support us on these funds are used to traditional venture. There, they don't get any distributions for a very, very long time. So their standards are, different. So they'd be happy to get distributions after 4 to 5 years.
Wonderful.
Yeah, I was just going to add there. I mean, I think it was Bill Gates that said when he talks about technological innovation, he's consistently underwhelmed by innovation in the short term and blown away by innovation in the long term. And I think that's the view that you take as a venture capitalist, is you're in this for the long term. That's how we, when we invest at the seed or pre-seed stage, we're going in for potentially 10 to even 15 years at the longest length. I think the median venture fund gets to 1x DPI in something like 8 years. I think that the crypto industry broadly has the benefit of earlier liquidity. I think if things are working, and you've been a good partner to your investment company, and you have liquidity based on statutory things like lockups, there's never been a situation where we've always been transparent with all of our investors when we go to portfolio companies, when we go to potentially go to market with a position. There's never been any sort of hostility in those situations, and I think it's an asset of the space, not a detractor, that you can get early liquidity, but it is a double-edged sword.
caring for the project so that they can still maintain a good brand and sort of presence in the market was important. So investors understanding that longer term view is important. I'm going to skip to this next question. We'll come back to the other one in a moment. But the crypto industry has expanded with hundreds of layer ones, if not thousands. And there are prominent networks that are still seeking projects to build on their network. And I would love to see this problem solved. We continue to see VC funds flow to infrastructure projects. Who doesn't love a layer one investment with 1000x, right? But it's not sustainable. It's not going to drive adoption for the industry. So I'd like to ask you all, what do you look for in an investment that is building on a crypto network? And how would you qualify it? What are you looking for? Take it any way you like, right? It can be something as cool as Securitize, which I got to participate in when I was in Ripple. It was a great one, but anything else?
I mean, we were fortunate enough to have invested early in Solana and Near and Polkadot and Flow and Filecoin, and so great, right? We love doing that. We're not really looking at layer ones now. We sort of feel like that ship has largely sailed, and partly because if you think about, Solana sort of differentiating from Filecoin, from Ethereum, right? They had a good story at the right time, and were delivering. I'm not sure the ones that came later, not only do they need to execute even that much more, so if you needed a 10x better maybe 6 years ago, you need 100x better now, but also to your point about infrastructure, most VC are like, oh yeah, that was a great investment. Like, we'd love to invest in whatever the next Solana is now. The problem is when everybody else is trying to invest in the next Solana now, you get entry points that are obviously in a very different place they were when the original Solana was around. So that's the first part of your question. On the second part, and we were talking about this as we're walking on the stage, and it's only in this industry that I have to say this like it's something distinctive, but we look for real businesses. And in any other industry, like what VC isn't looking for real businesses, and yet that's a thing here. And I think for us, one part of that, and I want to leave plenty for these guys to talk about, so I'll just leave one example. I want to see people who are using blockchain as a means, not as an end. So from our perspective, and people have said this from this stage already today, it's a technology. I want to know what you're going to use the technology to do, what new business you're creating, what new category you're unlocking, what value that you're creating that couldn't have been created without the technology, as opposed to, oh, we're more decentralized than the other guy's decentralization, which I'm like, okay, to do what? And so you too many teams in this space, I think, are still confusing the fact that they've got a means, not an end in and of itself.
Wonderful, thank you. Do you guys have anything to add?
Yeah, I mean, I think just like, I agree emphatically with everything that was said there. The best conversations that we have are conversations where, immediately it clicks. This is why this network needs, or this project needs a token. We understand it, like we grok right away. You kind of get to that point of the conversation, maybe towards the end of the conversation when you're just meeting a new company, and you kind of can already say what the token's going to do, because it just clicks intuitively. The ones that don't work so well are the ones that tell you like right away that they're going to launch a token. And you're like, oh, is that the business? Yeah, so it's pretty early on in the conversation that you can kind of understand where they fit in.
Okay.
Yeah, I mean, I don't have too much to add. You both covered it all, but yeah, it's been a bit of a frustration for me and our partners that it's been a very long infrastructure build out. There haven't been too many consumer apps or other apps that have gotten a lot of traction at this point. On the other hand, like we understand that this is a very nascent space where there are a lot of infrastructure that needs to be built. I think if managers do infrastructure and invest in infrastructure, we'd like them to do something really that's 0 to 1 or not marginal, right? An example is eigenlayer, like it was a new primitive. But creating the next layer 1 and trying to get the same returns that Solana had. At this point, Ethereum, Solana, and a few others have more or less kind of consolidated and as the top chains, and so doing marginal things that is just a very short-term game, I think.
Understood. Yeah, I think I've just seen companies struggle over the years where they have a Web2 business and they're growing, they're getting customers, they have money coming in, and they want to add a Web3 component. And Web2 VCs are just like, we don't know what that is yet, regulatory fear. And the Web3 investors are like infrastructure hungry. So if you have any advice for these companies besides coming to you guys and pitch for money, happy to share this because the recording will be shared, right? Yeah.
Yeah, I would say first and foremost, focus on answering, is this a real business, to Rob's question, and then where can token have an outsized effect. I think it was Hasib from Dragonfly had a really interesting post that's been like circulating recently about how communities work versus how some of these token networks work. A community works by each node on the network interacting with other nodes within the network instead of all like pointing to one thing, and so you get this exponential increase in the number of connections on the network, and that's kind of like where you see these things really start to take off when you can start to compound those network effects. And I think all too often that is kind of misused or misplaced in this industry, and really oftentimes out of short-termism. And so you want I think to pick a partner that isn't going to really push you to launch a token in a time frame that doesn't feel natural or comfortable, and you want folks that are aligned with you for the long haul.
Anything else, or we can move on?
Yeah, I mean, one thing that it's not the only circumstances under which I'll invest, but one thing that I've noticed increasingly catching my excitement are teams that come from outside the blockchain space and have some kind of domain expertise. And oftentimes they always saw a problem or an opportunity and they just couldn't quite figure out how to unlock it. It was kind of a nagging itch. And then they discovered the blockchain and they said, oh my gosh, this is how I do it. And you get some really, really interesting businesses coming out of that. There's one we have invested in called BlockSky. And if you'd asked me before I met them, hey, list 100 places you think the blockchain is going to have an impact that'll be exciting, I would not have written corporate travel on my list. And yet these guys are running the table in the corporate travel space. United's working with them, American, Southwest, Lufthansa, Hilton, Hyatt, Marriott, PwC does all their corporate travel on this system. It's a blockchain underneath, and it's just working. It's taking out tons of cost and unlocking a lot of efficiencies. And they don't spend a lot of time talking about the blockchain. They talk about the results that they're driving, and again, the blockchain is just part of how they got there.
Fantastic. Do you have anything else to add? Marcos, do you have anything else to add? Okay.
I think we covered quite a bit on this one. Like, we're happy to move on.
Yeah, great. So we have about 7 minutes left. I think we want to sort of just share some thoughts here. How many people in this room are investors in crypto projects? Okay. How many of you have been doing it for more than 3 years? So I guess we'll go to the other question. I was going to say, what advice would you give people? But these people seem to have some scars, so they don't need We've all lost
Maybe
money.
we should ask them for advice.
Who's lost money in exchange before? Don't answer that. Okay. Then just what are you looking forward to for this year from an investment perspective then? Just in trends or interest? I know that there might be some new go-to-markets that I heard some of you mention backstage. So it could be an industry side or just a new way to unravel the models that we see today.
Happy to, yeah. I can give you the big picture, right? And maybe you can give some component-specific examples. But I mean, the areas where we're seeing a lot of activity in terms of investing right now are on the consumer side. Things like Farcaster, SocialFi is one area. Another area is Deepin. This continues to improve and iterate as a category in various industries. Initially was, as you know, Helium, but since then there's been much more and probably better iterations to bootstrap these marketplaces, both supply and demand. AI and crypto is a totally new category, but I would assume that next year we'll see something interesting coming out of this. Stablecoins payments, as everybody knows, is a killer use case, and we're seeing more businesses around that. Bridge.xyz is an example, and others. So these are some of the key areas. I would say, we're seeing a lot of investments being put to work from the funds out there. So next year I'd be looking at some of these categories and companies graduating kind of the Series A or whatever.
How about yourself, Sam?
Yeah, I think you hit on the categories, and just to maybe add some detail, where I focus most of my time, we're a generalist fund, but where I focus most of my time is on financial services, payments, and then DPIN. And Tether just released their half-year report yesterday. They're the 18th largest U.S. Treasury bill holder in the world. And so, it's a massive business, and they, Paolo, the CEO, said that they have hundreds of millions of users globally. And when I talk anecdotally to people that do cross-border business, whether they're paying employees in outsourced development shops around the world or otherwise, USDC inevitably comes up in the conversation, or USDT. And so, this is happening very, very rapidly, and it's happening underneath the hood. We just signed a term sheet last night with a company that allows for effectively instant remittances using stablecoin and blockchain rails. And they're signing partnerships with the regular distribution centers that you see, different banks here in the United States and abroad, but they're just using the technology underneath the hood, and it's really amazing. In the area of DPIN, I think mentioned it a bit earlier, there are broad kind of infrastructural upgrades that we need to undergo in the United States and in certain sectors that are coming due now. And these companies don't want to, and it's hard to right now, especially when rates are high, raise capital for huge capital expenditure type projects. Can you outsource the cost of that to individual hubs or individual nodes on a network, and create a quality of service that's perhaps more redundant and better? The answer that I think the answer to that question is yes. One of my favorite projects in the space is Helium, which is decentralized wireless, and they asked the CEO, what would you say your largest mistake of the last year was? And he said underestimating the network effects that these Web3 companies can have. They tried to focus their go-to-market narrowly in Miami. They found nodes popping up all over the United States because people are just permissionlessly opting into this protocol of rules, this rule set. And I think that's absolutely amazing and is going to have profound effects in the years to come.
Yeah, so I'll try to be quick because I know you want to. I'm not going to go micro. I'm going to go macro on you, actually. So apologies. But it links with what both you were saying. So when you look back on technology shifts, of which the blockchain is one, they go through phases. There's the foundational phase, there's enablement phase, and then there's the business phase. And I think, particularly with what Sam was just walking us through, the blockchain's entering the business phase, and I think faster than most people recognize, because we've been stuck in the other two phases for so long, hence your question about, oh my gosh, are we still funding more infra here? And I think, again, Sam gave a bunch of examples of how it's moving into the business phase. I think, Sam, was also you who said, we're seeing now more top-down interest, meaning enterprise interest. And if you look around at financial services, you're hard-pressed to find a major financial institution that isn't doing something with the blockchain. They may not be super public about it, some more so than others, but it's happening. And if you look at where value has been created with every technology shift, the vast majority of the major value creation events and the absolute value created is always way over indexes in the business phase. So that's what I'm excited about going forward, because I think we're getting there now. It's probably, as much as it was great, as we talked about investing in Solana several years ago, we may right now be at the point where the biggest outcomes are going to come from. It's now, not 5 years ago.
That's very exciting to hear. I think that's great. That's a great way to end it, but I'd love to take questions from the audience before we go. Yes?
I got a question. I had to write it down just because I was following speaking. But so it's just transformations right now and just speaking on adoption and real business use cases. I just wanted to circle back to providing liquidity back to the LPs at the end of the day. So when you think of these token generating events, do any of you think about the distribution in kind to these LPs, specifically that truly believe in specific projects? How do you guys think about that? I'd just be curious from each of your guys' angle.
Do you mean distribution from?
The tokens.
Instead of selling the token and giving them the cash, give them the token. We actually did exactly that. We gave them the option. That's a better way. So the problem with tokens is there's an overhead to holding them, right? And so I'm not sure how deep I should get on this, but we both gave the option, hey, you can take it, you can take cash, or you can take it in kind, and we'll help you with the in kind piece of it, because obviously we've had to develop that muscle and have those relationships. So that's how we've navigated it.
It's actually to hear your same thing though.
Sure.
We've always offered it in kind.
Well, I would say that in general, we've been offered by our managers in kind. Usually it's in kind or cash, pick. And we've seen it in some of the more mature, larger tokens because they're easier to custody, right, for LPs. We haven't seen it as much with kind of smaller networks and so on, where LPs just don't know what to do with these. Like, you know, they could potentially hold them in their Coinbase account, but you know, they tend to be fearful of things they don't understand. So, if it's a distribution like of a more mature asset, then they're open to it.
Thank you. And then we had a question in the back. It's you.
Cool. So for you guys from a venture capital standpoint, here Web3 is obviously unique compared to other asset classes you can invest in. Is your guys' primary goal at the end of the day you invest in a company and eventually there's a token generation event, or it's eventually a company goes public, or what's kind of the end game to a certain extent for you guys when you invest in a company or a project?
Yeah, I'd say all the above. But I think the trend in our portfolios has been one of more of the portfolio, higher percentage of the invested capital and DPI coming from token outcomes as opposed to equity outcomes. We invested in Coinbase in 2017, and that was obviously an IPO outcome. We've invested in several companies that we structure it such that we give ourselves the optionality for a equity or token outcome, and more we see thoughtful entrepreneurs opting towards issuing a token because it's almost like you can create value accrual mechanisms to the token, plus you can create this viral incentivization behavior that's proved really powerful in many of these networks.
I think there's a
one quick question that so preference, distribution in kind or equity? What's your preference right there? That's like, I mean,
Yeah.
As LPs, a lot of us say like we want to stay on the boat. Let's just call it that way. Instead of paying the tax, prefer to have a token.
Yeah. I think it is more of a burden to distribute in kind. You incur certain risks, right? That if it's a token that somebody doesn't fully understand how to custody the token, and whose fault it is doesn't really matter at the end of the day. It's just like you need to, that's a risk. And then same with even transferring to a brokerage account. We've done that before, and it's like, did we get every zero correct in transferring? And so, I think, but we want to continue to do it because we want our LPs to be long-term holders in the network.
I would also add that many LPs just don't know what to do. As I mentioned it before, they don't know when to sell it. You know, they don't know what the right price.
How to stake.
How to stake. There are
Yeah.
many things. So.
Do you guys ever find pools or say, hey, listen, you guys should look over here? Hey, I just gave you this token. Or does that start breaching some kind of
Yeah, it's like it's like you hear every podcast in the crypto space, starting with like not investment advice, like
investment advice.
like a 4-paragraph,
buy.
like it's like speed run, it's like 5x speed, So yeah, but that's real, right? That's as an RIA, that's incumbent upon you to say this is not investment advice, like kind of wade in at your own risk, and so we really don't do that.
The question on what you're looking for, IPO or liquid or token. Did you guys want to also touch base
Yeah, I
on
mean,
that, and then we'll wrap it up?
the one you left out, M&A, that, believe it or not, that's happened too. And yeah, IPOs have been rare, but I think there'll be, obviously, there's only one way it can go from here, which is more, but I think we will see more. M&A is still a thing and has happened. The other thing too, and maybe this goes back to part of why you guys are asking questions going, you don't necessarily have to immediately distribute at TGE, right? So I think that's for us, right? If one of the nice things about tokens and liquidity is, well, hey, you can take some money off the table, like you were talking about with staking warrants and what have you. But I also think that being a long-term investor means that, let's put it in .com terms. During the .com bubble, if you could have taken all your money off the table, you would have been so glad about a year after the fact. You'd be like, oh, thank God I got all the money out. And then you'd realize that you sold Amazon and Google, and you'd say, what an idiot I was. I should have let my pets.com ride to zero and kept Amazon and Google, because all the value I would have gotten from those two investments was way more than me selling and getting out of the other .com. So I think that's something just bear in mind here. Just because it's liquid doesn't mean you should dump it immediately. In fact, if you have conviction and you're a long-term investor, you definitely shouldn't.
That's great advice. I totally agree on the long-term holding. All right, thank you so much, everyone. Oh, one more question? Okay.
We're
We're getting in trouble. No.
going to get in trouble.
Dr. Hook's getting us. Better find us afterwards.
We can come later.
It's over. Thank you so much, everyone. We'll be backstage getting our mics up. Just meet us there. Okay.
So yeah,
Thank you, everyone.
we're all on.